Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, 24th of July, Wednesday. Today, it's a big red day for the Nasdaq and for a lot of markets. Let me tell you that we are way below that I was expecting a bounce, and we never got one. It's been even 5 or 6 hours of continuous sell, and sell. And there's reasons for that, but I think we are quite overextended to the downside. So let me preface that because I think there's a reason why. I'm going to explain you why everyone's fears is increasing. We are seeing the inverted yield curve just going nuts in the uninversion, and that's quite dangerous. And we've been seeing Tesla and Google and all these tech earnings going not meeting expectations. And I think that's one of the reasons. We are going to review right now the economic data, but I don't think the economic data it's causing anything of what we are seeing. The MBA 30-year mortgage continuing a little bit lower from 7%, 6.82. Applications are still in the negative, so I think everyone's waiting for interest rate cuts. Apart from that, we got the S&P Global PMI Plus. This is an estimate for this month of July. And we got composite 55, strong 50, above 50. Remember that is expansion. Manufacturing below 50, and that's one of the misses of today's data. And services PMI continues 56 from 55. We're expecting 55, another increase 56. So inflation is still pushing, but no one's talking about inflation. No one, because what we are trying to see and what we are trying to know is how are all these earnings gonna be. Yesterday we got Tesla and Google, and let me tell you that Tesla dropped yesterday 8% during after hours, and today is just another 11%, because earnings fall short of estimate. I'm not going to go deep, but basically the EPS miss, earnings per share 52 versus 62, and revenue is increased, but I mean, the earnings per share, the robotaxi got delayed to October from August. I mean, Elon Musk has a lot of issues with demand for Tesla. Google meets earnings, but the big revenue of YouTube misses Wall Street expectations. So you can see that earnings 189 versus 184, revenue 84.74 versus 84.19. But YouTube advertising 8.66 versus 8.93, that's a miss. Google Cloud revenue, that's a tick. And traffic acquisition costs, it's also a miss. So a little bit of concerns in terms of AI is not providing a lot of insight and a lot of future expectations. So YouTube, it's the cause of Alphabet and Google losing today more than 4%. Another one, this time is the world's largest luxury group, LVMH, slumps more than 4% because of second quarter revenue miss. And what all these have in common, Tesla, Google, and Louis Vuitton, is basically consumer. Consumer spending is expected to cool down a lot because no one's able to basically hold anymore all this environment of higher interest rates and higher prices. So the demand is being crushed, and these consumer discretionary stocks are being destroyed. Let's just go into the chart, because as always, I'm going to start with the 1 hour chart, because now it's pretty clear that all this accumulation on the point of control was distribution again. So all this range in which we were just chopping up and down around the point of control was just sellers accumulating again for this big dump. They have the excuse, they have the catalyst. The big tech companies are not meeting expectations on earnings. Apple is 3%. Let me just go to the 1 minute to really see how the weakness is affecting the entire Nasdaq. Apple minus 3%, Microsoft minus 4%, Tesla minus 11%, Amazon 2.14 in the red, Google 5% in the red, Nvidia 5% in the red, and Meta 5% in the red. Something that is also quite concerning is that regional banks are quite in the red, and the same goes for the small caps. So today it's quite a bloodbath. Dollar is also suffering. Yields are going nuts to the downside. And I think the elephant in the room is the inverted yield curve that today it's 45% in the green today. Look at this candle. Look at this candle. The uninversion is right here. And once we uninvert, we are starting to see signals of recession and signals of concerns with the economy. And if the Fed does not cut soon enough, then the markets will freak out way more than what we are seeing. So what we are seeing right now on the daily is just a big dump day, more than 3%. I was actually trying to buy the 3% in the red, and I got smoked. I got smoked. So basically, what I was looking was, this was the line on the 3%, this orange line. Let's go to the 15 minute. It's straight down, straight down. There's no signal of strength. We don't even have the typical pullback for the feed retracement into another leg down. It was just sell, 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 sell everything since the open at overnight, in which we left a gap behind. From the open to where we are right now, let me just tell you that we closed yesterday, and where we are right now, it's 665 points below. That's insane. That's the worst day of the Nasdaq since, I would say, years ago. Let me just check real quick. I mean, it's the worst day since 5% in September 2022. Maybe this bottom from last year, no, 2.37, 1.87. This is going back 2 years in order to see this kind of sell-off. Now, I have levels here, but let me just first show you how I got smoked out for 20 points of risk. 14 points, sorry, so $300. I was watching basically, let me just first remove what I got here for the account, okay? So basically what I was trying to see is this, an inverted fair value gap into a bullish fair value gap being pushed higher, and I was just looking for a scalp. I mean, the scalp today was 70 points. That's the volatility that we have today, in which the VIX is 17% in the green. So basically, this is the setup. We all know what's the setup. We tapped, this is the 3%, this orange line. We tapped 3% and we instantly got buyers. This was looking pretty good, but look at this 45 EMA, which is basically all resistance until basically 1 hour ago. So it got rejected, and then I got stopped out down here. And that's all. I don't want to see anymore this market. I don't want to see today's price action anymore. I will just try to find more levels for tomorrow. After this big sell-off, let me tell you, there's some levels quite interesting, not only for us day traders, but also for investors. We are coming from here. Let me just do it. We are coming from here to this volume here. So basically, as you can see, this zone here was the NFP, the non-farm payrolls of June. This was the consolidation. I blocked, I had this candle of the NFP already charted. And as you can see, we are in the middle. NFP candle, 7th of June, and the volume peak in which we are right now, I'm quite interested in this volume node. This volume node is basically 19,350s, and the 50% of the NFP candle is at 300. I think we are going to hold 300s. I'm starting to see seller exhaustion. As you can see, there was quite a push here, but buyers couldn't take control. And at some point, all these shorts are going to go so deep into their positions that they will have to cover, and they will just short into the bottom of the barrel. And those are going to be squeezed. So that being said, I'm not going to trade this, but I would like to see these levels hold. The 300 of the NFP candle and the volume peak of the 350. In this range, I would like the Nasdaq to hold this range. We are here right now. I'm not going to trade it because anything can happen and we might slip into the bottom of the range, and that would be 100 more points, and I don't want to do that. But today's close is going to be quite important for the rest of the week. So this is the setup. I want the Nasdaq to hold this range, and then tomorrow we might see some kind of action or a retest of this 1 hour fair value gap, or maybe 19,500, things like that. But today there's no way we are going to see a bounce. It's just today's about what and where and how are we closing today's price action, because this 45 EMA, man, this was quite a trend day. Shorts got paid big time today, and it is what it is. Sometimes you get smoked. You have to try to get those stops right there and leave to trade another day. I don't want to have 1,000 bucks of 1, 2, 3 bad trades. I don't want that. So today I just tried, but there's no way this market is going to bounce today. Maybe tomorrow, and that's what I will be waiting. And that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel, because I upload videos like this one every single day for market forecasts, market updates, and market recaps. I appreciate your time as always. Remember that the trading day is not over yet. Let me just recap today's range. I would like to see the Nasdaq hold these two ranges from 350 to 300. And then tomorrow, perhaps we are going to see some kind of dead cat bounce. Is this the bottom of the pullback of the sell-off? I don't know. But I'm seeing quite good levels for investors to really commit, and those have big pockets. So let me just tell you that might be interesting for tomorrow. Today is just, it is what it is. So be really careful if you are trading to power hour, and I hope you didn't blow your account today. Leave to trade another day, and more than ever, be disciplined, be patient, and risk management is key in this environment. Stay safe, everyone, and see you tomorrow.